You've seen some of that commentary, and B, would you care to comment?
Of course, I can talk to that, Senator. I think that discussion is not really relevant for the current bill. The issue for the current bill is should there be a limit on a ban on the use of in business of very large transactions using cash. But the concerns that you referred to, I think, are very different, and it's a scenario that I think is something like this: that somehow this is a precursor to the imposition of negative interest rates and the government deciding to withdraw cash from circulation. I'd make 3 points on that scenario. The first one is that monetary policy is set by the Reserve Bank Board. It's not set by Treasury, the ATO, the Black Economy Task Force, or with greatest respect by Parliament. Yep. It's set by the Board according to the mandate that has been given to the Board under the Reserve Bank Act. And the second one is that the Governor has spoken recently on this issue and talking about the possibility of the policy rate, so that is the cash rate target going. He said that he views the negative interest rates in Australia, the prospect of negative interest rates in Australia, as extremely unlikely. And he also made the point that even in countries where the policy interest rate has gone slightly negative, the interest rates received by households on their deposits haven't. There's almost no examples of negative interest rates for household deposits in those few countries that have had negative policy rates. And then the third point I would make is that the notion that cash might be about to be withdrawn seems a little far-fetched. The Reserve Bank and the government have both said in different contexts recently that cash is a very important part of our payment system and our economy. So with respect, I think some of those concerns that you've alluded to are a little far-fetched.
Thank you very much. Do you monitor the costs of electronic transactions? And I mean, we've had presented to the committee today the idea that a cash transaction is a way of saving consumers money. Yeah. So do you monitor the cost of electronic transactions, and how are they trending?
Yeah. We do in at least two ways. One way we do it is we publish data in our bulletin on the average merchant service fee paid by businesses to receive different types of cards, debit and credit cards. And those data show that the cost of card acceptance for Australian merchants is actually very low by Australian standards. And it's actually been falling. It's actually fallen significantly over the past 15 years or so. The Payment System Board, which is the Reserve Bank's other board, took some regulatory actions in about 2003, 2004, which have had the effect of bringing down the cost of payments. So the cost of payments in Australia is actually low by international standards. So that's the cost of accepting payments by card. So the cost of debit cards is around, on average, it's around 50 basis points, around 0.5%, and the cost of receiving credit cards is in the order of about 80 basis points. 0.8%, and that's low by international standards. The other thing we do is periodically or infrequently we do a broader survey on the cost of household payments in general for the entire economy, the broad research cost, the broad resource costs, not just the costs paid to banks, but the costs, the cost in terms of the time that consumers spend or businesses spend in making payments, etc. And that data we published this data most recently in 2014. I think that shows that Australia has got a fairly low-cost payment system by international standards.
And what about I'm not even sure this is the correct phrase anymore, but clearance times? The speed and efficiency of a transaction. How have they trended over time? There was a new payment platform put in place, I think, a year ago.
Yes. Yeah.
And is there anything coming up in that regard to I guess, reduce the friction?
Yeah. Clearance times have improved. The payments industry did something called same-day settlement in 2013, which meant that there were clearing exchanges of payment instructions between banks several times a day rather than just once a day. And then, as you said, in early 2018, the industry launched the new payments platform, and that infrastructure allows basically instant payments. So I could, using my bank app, even if you're with a different bank, I could pay you, I could send some money to you, and you would have it probably in about 3 seconds. And that's been gradually rolled out to customers. Most banks have started rolling it out to their household customers, but it's increasingly being rolled out to business accounts too. And so that has very significantly improved the quality of banking services to and electronic payments to both households, businesses and governments. The government is actually using it to make emergency payments, and it can make payments at night, on weekends, and the recipient gets the money straight away within about 3 seconds.
Finally, from me, there's been some suggestion that this will inevitably drive people to the banks, particularly the big four banks. Are there payment paths that don't involve the banks? And I'm not sure you're qualified to answer that, but if you are. And what percentage of the transaction flows would they be, do you know?
Right. Well, the bigger picture is that payments are already flowing to the banks, that there's been a significant shift away from the use of cash towards electronic payments, and those electronic payments overwhelmingly go through banks. There are some non-bank electronic payment methods. For example, you could probably think of PayPal as being that,
we also had cryptocurrency raised as a potential pathway earlier today.
Right. Happy to chat about that. I actually have some Bitcoin on a wallet on my phone. I've had that for about 5 or 6 years now, just for purely experimental purposes, and it hasn't become a mainstream payment it doesn't meet many of the things that many of the criterion that we would normally attach to money, that it's a stable store of value. Well, it hasn't proved to be that. A unit of account. People don't post their prices in Bitcoin. Even Bitcoin conferences don't post their conference fees in Bitcoin. And then as a means of payment, well, it's a possible means of payment for person-to-person transactions, especially cross-border ones, but it's not something that people are using in day-to-day transactions. I have actually once used Bitcoin to buy a cup of coffee in Sydney. There's very few places in Sydney that will accept Bitcoin for things like that, but they don't actually want Bitcoin. They would be converting that straight back to Australian dollars. So it's interesting from a conceptual point of view, from a theoretical point of view, but it hasn't become a mainstream means of payment. But it's something we continue to study, and as you're aware, that there are proposals for other forms of stable coins, they're called. Facebook's got a proposal, but it remains to be seen if and when that will ever launch.
Okay. Senator Patrick, I understand you're on the line as well. Will have to be the last one.
Okay. You talked about cryptocurrency and perhaps low take-up. Do you have any data that you could provide on notice that shows the take-up of cryptocurrency over perhaps the last 5 years? And indeed, is there any thought that has been applied to the idea that if this legislation were to be enacted, whether or not there would be a drive towards cryptocurrencies, noting it would avoid the sort of scrutiny that is, or the traceability being sort of sought under this legislation?
I'll take your question on any data on notice to see if we can provide anything.
Thank you.
On the question of could there be a shift towards cryptocurrencies, I suppose at the margin, if an entity is currently transacting in cash for nefarious reasons and decides that it's no longer going to use cash, it could potentially shift into cryptocurrency. I note that to get into cryptocurrency, you typically have to get in via a bank transfer. So there's there may be some limits on that. So to get your money either into or out of cryptocurrency, you probably have to go through the domestic banking system. Once it's in cryptocurrency, something like Bitcoin, it's not completely untraceable. It's less traceable than a bank deposit, but it's actually more traceable than cash. So, but I note that the bill defines currency to include cryptocurrency, though the Treasury may be exempting cryptocurrency initially.
Okay, thank you, Chair.
Thank you, Senator Patrick. Will, thank you for your time today. We appreciate it. We will need to move on now to AUSTRAC.